Hi, it's Lori here, and we're going to do Mo's photography and work through that example. The first thing I like to do when I get one of these is to highlight, either with a pen or in this case I used yellow highlighting, all of the information that I'm going to need to put into my spreadsheet. And I'm going to do that not only for the original budget, which is this section right here, but also for the worksheet with the IMC plan, where I've highlighted what's going to change. And in worksheet 3, I highlight that I need to analyze the incremental effect. And in 4, I highlight the fact that we're going to be doing a lease versus buy or use decision for the camera equipment. So let's begin just with the original budget. First thing we need to do is I've already taken a little bit of time out here and input all of our assumptions. And I began with our number of weddings and went in and included an increase per year for those. Probably should name that increase per year weddings, and our increase per year album cost, and our increase per year price. That way, if we later have a scenario where we need to change one of those from 100%, right now they're all at 100% because they expect no change, I can do that without having to add anything to my spreadsheet. My camera lease is 20,000 and the number of cameras I'm leasing or leases I'm entering into is 1. My increase per year is 110%. Remember here you just put it in as 110 with a percent sign and it will automatically do that for you. Put it into a percentage format for you. We also put in Watson's hours per week. Then we added a line hours per year because we don't really care about Watson's weekly hours. We are looking at it on an annual basis. So I have used the hourly hours per week times 52 weeks per year to get 1,820. Then I put in the cost per hour and the increase, cost per hour Watson. And that's 104%. My payroll taxes, as a percentage of payroll I entered. I've got my health insurance, my number of people on health insurance, and here we know that it's 2 people because Mo's on it already and Watson is also. Our increase per year for health insurance, they tell us, is 115%. Then I have my overhead, which is my heat, light, utilities, and cell phone. Put both of those in on an annual basis, and I know that they're going to increase by 2% according to Mo's estimate. I also need to do how much I'm going to spend on clothing. I've got my tuxedo cost per tuxedo and the number of tuxedos per year. Again, the shoe cost per pair and the number of pairs per year. And finally, I've got my increase in both of those, how much they will increase. Mo has estimated that they're going to stay flat, but I'm going to put a number in there just so I can quickly change it if I need to. Here's an interesting part. We've got our car lease per month at $500, but we don't want to express it in our spreadsheet in that way. We really need our car lease per year. So I've simply taken the next line down and put car lease per year equals 12 times my car lease per month, which is B31. And I do the same thing for my gas, the same thing for my insurance, and finally the same thing for my auto maintenance. And I need to enter in that my increase per year in car costs is 105%. Now I am ready to build my years. So I've got year 0, year 1, year 2, year 3, and year 4. We want to include a year 0 here, even though right now we're not using it, because later on we might make an initial investment and we would want year 1 there. So the number of weddings per year in year 1 is going to equal our assumption, and in year 2 it's going to be, our assumption for year 1 times our increase per year. And we're going to want to anchor that right there. Press F4 and we should be able to carry that all the way over. And it works. Great. Now, next we've got our album cost per year, and that's $110. Well, I think that actually should be $100, shouldn't it? So let's fix that right here in our assumptions. And again, we're going to want to use plus year 1 times the expected increase, which we'll anchor with highlighting and pressing F4, and then that will allow us to copy it right over too. Finally, we've got our price per wedding. We're going to have that for year 1, comes straight from our assumptions, and for year 2 and beyond, you want it your prior year times your increase per year, And we want to anchor that so that we can copy this formula over. We do that, and then we're able to copy it over. Sorry about that. A little tricky tonight. There we go. Now we've got our camera lease, and we know that it is 20,000 and that we're going to have one. So why did I just do that? I'm going to go right across, and in this case we can copy that, or we can say equals 1. And our increase in cost is 20,000 times our increase per year in camera cost. And again, we're going to want to anchor that by highlighting it and pressing F4 to get our dollar signs. And then we can carry that right across for years 3 and 4. In this case, we're going to just pick up the prior year. And for Watson's hours per week, cost per hour. So let's add a line. We could work with this. Watson's hours per year. We're going to just pick that up. And again, we're going to pick up the prior year, and we'll just carry that across. And our cost per hour is our assumption for year 1. And then for year 2, it's going to be our assumption for year 1 times the increase per hour for Watson. And again, we're going to want to go up there, hit F4 so that we anchor it. That looks right. Carry it across. Ooh, looks good. Payroll taxes is a percentage of payroll. And again, we'll want to refer to the prior year. That way, if there's some sort of change, we've picked that up already. Our health insurance we know is 13,000 for year 1, and for year 2 it's going to be 13,000 times this 115%, which we're going to want to anchor, and that will allow us to carry that right across. Number of people on health insurance, pick that up as a plus, and then for year 2 we just pick up the prior year, same for year 3, and same for year 4. Our heat, light, and utilities for the first year is our assumption, as is our cell phone. For year 2, we're going to pick up year 1 times our growth rate, and we're going to anchor that. And we'll be able to carry that right across. And for our cell phone per year, we're going to take up year 1 times our annual increase, which we're going to anchor so that we can copy that formula all the way across through year 4. Our tuxedo cost is $1,200, and that is how is that going to increase? Well, we're going to take year 1 times our increase in tux shoes, and in this particular case it's 100%, but if later on we would need to change that, this will automatically take that into account. And because we've anchored it, we can carry it right across. And our number of tuxedos we're going to pick up from our assumptions, and for year 2 we just pick up year 1 or the year right to the left, and because we've made it a relative formula, we can carry it across. Same thing with our shoes. Our shoe cost is going to be our shoe cost in year 2 is year 1 times our increase per year, which we're going to anchor by highlighting the whole thing, hitting F4, and now we should drag it across, and it should be 500 all the way across. Good. Our number of shoes is 2, and here we're just going to pick up the prior year, and we should be able to carry that across. Our car lease per month we don't care about because we're on an annual basis, so plus 6,000 we're going to do on the lease per year, and we know that that is going to increase in year 2 by this 105%. Let's anchor that, hit F4, and we're all set. Carry that across. Again, we're going to do our annual gas per year, and that's year 2 is going to equal year 1 times 105%, which we're going to hit as F9, and we're going to carry that across. Whoops, got an extra year there. We can get rid of that. Our insurance per year is going to be 600, and it's increasing by 5% per year, so we take our prior year times the 105, which we anchor as usual by highlighting it and pressing F4, and we take that across. We have just one more. You're almost done. Pretty exciting. So we've got our 840 for our auto maintenance for year 1. And in year 2, we're going to pick up year 1 times, again, that 105%, which of course needs to be anchored. And then we'll be able to carry it across. So we have all our assumptions updated for each of the years. And we should be all set. So let's go ahead and draw a nice line around this. Oh, you know what? Let's go ahead and put in our threshold interest rate, which we're going to find is 7.2%. And that number is found in the second paragraph, which is on page 2. At the bottom, towards the end, on the fourth line up, it says 7.2% per year. So we're going to do that. And we just leave it right there. Now we're going to go ahead and box in, because Sean loves us to put a box around our assumptions. We're going to put a box around our assumptions. And we're going to create a nice thick box around it. Beautiful. Next, we're going to steal one of our colleagues' best ideas ever and create a red line. And the red line says, nothing below this shall ever be anything but a formula based on things in the upper section. We begin with our revenue. And sometimes there's a temptation to go ahead and shortcut this process, but I don't recommend it. If we take the time to lay out a beautiful spreadsheet ahead of time, then when we go to copy it over and make changes for the scenario analysis, it will be much, much easier. So we know in year 1, and remember this is year 1 in column there. And if you want to put your years again down here so that you can see them, that's quite all right. So our revenue in year 1 is equal to, there's no revenue in year 0. Revenue in year 1, we're going to go right up and do our number of weddings times our price per wedding. And see how it highlights both of those? We hit enter and it takes us right on down. And we can copy that across. Wonderful. And then our cost of goods sold, which is our variable costs, times number of units, is going to have us using our variable cost times the number of units, the number of weddings, and we get $11,000, and we should be able to carry that across. And it worked. And now we figure out our gross profit, which is our revenue minus our cost of goods sold. So just plus our revenue minus our cost of goods sold. And because that's a relative formula, we should be able to carry it right across. And we can. Great. Now let's do our operating expenses. First one we've got is our camera. And here we're going to pick up the cost of the camera lease, which is right up here, times the number, that's a star, times the number of cameras we have. And that will carry right across. And it works. Next we have our, Watson's cost, Watson payroll. And that's a formula which is equal to, you can use equal or plus, our hours per year times our cost per hour. Very good. And because that's relative, we should be able to take that right across. Next, we've got our payroll taxes. And we know that is equal to our payroll tax percentage right up here times our payroll, which we've just calculated down here. And it is tempting to just put in the 0.085 down here, but then if you change payroll taxes, you have to remember to go down and do that in these formulas. And I just cannot recommend that. It just seems like a shortcut at first, but it turns out to be the long way around with a lot of potential for mistakes, so I don't recommend that. Next, after payroll taxes, we've got our health insurance. Okay, so we've got a health insurance. And that we know is going to equal the cost of our health insurance, which was $13,000, times the number of people who have health insurance. Easy enough. Carry that across. It looks like it is doubling. Look how much that goes up. Boy, health insurance, if it increases 15% per year, can really increase quickly. Next, we have, I'm just scrolling up here, our heat, light, and utility. Heat, light, utility, and cell phone. Well, we've already calculated these, so we can just have them equal. Go up and pick up those numbers. And because we've made it a formula, we just drag it across. And again, for the cell phone, equals, and go up and find our cell phone cell right there for year 1. And then we can just carry it across. Next, we have our tuxedos. And we know that is equal to our tuxedo cost times the number of tuxedos we're buying per year. Carry that across. Our shoes, same thing. It's equal to our shoe cost times the number of pairs of shoes we're going to buy each year. And we can carry that across. Next, we've got our car lease. And we can just have it pick that up from right here. Carry that across. We've got our gas per year. So I'm just not going to bother to put per year because we all know it's per year. Our gas cost, and that's going to equal the $2,400. And we'll carry that across. Then we have our insurance, and that is going to equal what we've calculated up above here, our insurance per year. And because it's a relative formula, we can carry it across. And finally, we've got our auto maintenance. And that is going to equal our number up here, and we can just carry that across. So, in a matter of just a few minutes, we've been very careful, but we've set up a spreadsheet that we think we'll be able to use. Let's see what our total operating costs are. And here we just hit our auto sum up here in the corner. It highlights what it wants to sum. We agree that's the right thing. We hit enter. And we can just carry that right across. So our operating profit equals our GP minus operating costs. So it would equal our gross profit minus our operating costs. And that gives us 10,413, which I believe might match the numbers that we've got. Yep. So let's carry that across and see if it works all the way across. Oh my gosh, we should be celebrating because we are there. Now you'll notice it says 14,281, and that is because we have rounded. Oops, won't bother doing that. But I can get it to give me the sense by just highlighting those and using this icon to increase my decimal points shown. And same over here. There we go. And that should equal what you've seen on the answer sheet. The next trick is to do the present value of our cash flows. And remembering that our cash flows are our operating profits in this case. And we're going to go to Formulas, Financial, scroll down, PV. We can move this over so we can see things. First thing it wants to know is our rate. Well, we can just fix that right there. And let's go ahead and F4 it so it's fixed. The number of the period, we can pick it up right from here if we'd like, or you can go all the way to the top of the spreadsheet if you did not give yourself an extra one, and you could use E4, but we used E41. Our payment is 0 because we're not using a payment. We're using a future value, and we put our future value in as a negative number, and we identify our cash flow, our operating profit, and we hit return. And that gives us a 971362, which looks right. Now, because we have anchored the interest rate and everything else is relative, we should be able to drag this formula across to get our numbers. Now, if you get a bunch of number signs, it means your column isn't quite wide enough, and you just need to go up between the two numbers and highlight it till you get this funky cross and then double click. and it will give you just the amount of room that you need. In this case, our NPV, let's do our year zero. Our year zero is 0. There's no operating costs. There's no gross profit. So our present value of cash flows, we can use this formula. We just highlight copy. Then we go over here, left click and paste, and it gives us $0. Our net present value is equal to, let's go back to home, the sum of all of our cash flows from year 0 through year 4. We just hit return, and then it tells us that our net present value is a negative 259973, which means it's a negative net present value and we wouldn't want to do the project. Our ROI, which is equal to our gain or our net PV over our investment, can't be calculated because you can't divide by 0, and you've got that. But we do know that if we had made even a small investment here, it would be a negative number because this is a negative number. So we know that this is not a winner of a project. And that is how you do the original plan for this. I'm going to cut this video here and do a second video where I go through the scenarios. That way you can refer to them separately.